Hey guys, what's up? Alec back with the daily stock market, and look at that. Friday was an interesting day to say the least. Okay, Tesla was up 1% on the day, up 5% on the week, having a little bit of a bounce back. But in the video today, we're going to be going over a bunch of different stocks in rapid fire fashion so we can talk about as many different stocks as we can. And we're going to talk about our predictions for 2023, where the stocks are going to end. So we're going to do some bold predictions in this video. So make sure you stay to the end throughout this entire video. Like the video, subscribe on YouTube. And with that being said, let's jump right into the video. So the first stock is Tesla, up 5% on the week, but they're down 37% in the past month. If you've been following the stock market at all, then you know Tesla's been having a very, very rough month and a very rough last 3 months, down to $123 per share. Okay, now we did see Tesla under $110 per share. My prediction for 2023 is that we're going to see Tesla closer to $85 per share as a bottom of around $75, maybe even $60 per share at the absolute bottom for Tesla on 2023. Dollar cost averaging is going to be the best thing for a stock like Tesla because it's impossible to predict the exact bottom. Even though people are predicting and acting like they know exactly where the bottom of Tesla is, the truth is nobody knows. So dollar cost averaging is going to be the best thing. I think $75 per share for 2023, it will go down. And in the end of 2023, I think Tesla could bounce back as high as $250 or at least $200 per share. As Tesla continues to sell off in 2023, I think it's very possible to see 100% gains from Tesla in 2023, more towards the end of the year. Tesla did report its year-end vehicle production and delivery numbers for 2022 on Monday, falling behind Wall Street's estimate by around 3%. Okay, here we see a little pop-up, by the way, 3 things Elon Musk can do in 2023 to get Tesla back on track. Make sure you subscribe with post notifications on because we will be going over that article in one of the next videos. Okay, the company founded by Elon Musk delivered around 1.3 million vehicles last year, or 40% growth in the units delivered during 2021. In a historical first, the company surpassed 400,000 vehicles delivered in a single quarter during the fourth quarter. We continue to transition towards a more even regional mix of vehicle builds and again led to a further increase in cars in transit at the end of the quarter, Tesla said in a statement. Early reactions to Tesla's Q4 delivery. Gary Black, managing partner of the Future Fund, said on Twitter, "There's no way to sugarcoat the fact that Tesla missed a consensus on delivery units for the fourth quarter. Tesla delivered 405,000 units against the consensus estimates of between 418 and 427,000. Is the miss due to a change to a more even regional mix of brands, or is there demand issues?" said Black. So that's a good thing to kind of get some clarity as we progress in January and February. Is there a demand issue? Is it something else? Okay, if it's not a demand issue, then obviously there's no reason to be that concerned or worried but if there is a demand issue, then there is reason to worry because all the new factories opening up, you know, they're going to have surplus of demand with all these factories that are now opening up. So Tesla is a growth company. It's going to have growing pains. It's still a relatively new company based off all the success that it's had recently, just in the last 3 years. Okay, now remember, they are up 40% year over year, which is still a huge growth. A lot of companies wish they can grow deliveries 40% per year. Here we see another tweet. Investor and influencer Kevin Pathrath, best known as Me Kevin, said that not many companies grow like this during a recession and called the results incredible growth during a difficult year. Tesla production up 47% year over year. Tesla deliveries up 40% year over year. Incredible growth. And here we can actually see that full tweet. And here I posted on my Instagram, Tesla missed deliveries. Here we can see 3 X's. Okay, and then somebody replied, clearly a company heading towards bankruptcy. And I put in their sarcasm because you can see that the growth of Tesla that they've been having, and obviously they're not heading towards bankruptcy at all. They're actually heading towards a more profitable company as time passes. And if we want to double check that, we head over to the net income and we can see that it's on an upward trend. And if we go to a quarterly basis, we can see that it has been growing as well. Q2 2022 had a little bit of a step back, but it's typically around 3.2 billion in profitability in net income per quarter. So if we want to track Tesla more carefully, make sure you're tracking the net income quarter over quarter, and we want to see that closer to 4 billion per quarter in net income by the end of 2023 to see that huge growth. Now in total revenue, we can see that it has been growing on an upward trajectory. And on the yearly basis from 2017, obviously it's been growing around 30% per year. Okay, so Tesla really just needs to keep up this growth story of 30-40% on total revenue and net income year over year, which it is doing as of right now. The balance sheet's also looking pretty good with the debt to asset ratio under 50%, right at 49%, implying that it has significantly more assets than liabilities, meaning that bankruptcy should not be coming anytime soon. But we want to track that balance sheet. If you are worried about bankruptcies, you don't want to see that debt to asset ratio crawling above 80%. That's a huge, huge red flag. But it seems like Tesla has their business model under control right now. So we should see the balance sheet staying healthy, and we should also see that net income and total revenue growing every single year. Now, we ended up diving a little bit deeper into Tesla than was planned. So let's go over a little bit more rapid style. Here we have Apple down 12% in the month. Will they follow Tesla's pattern next and head down next week and into the month? I actually put out a video on the best put options to take out. Apple was on the list. Make sure you watch that video if you are into option trading or looking for a put option. I do think Apple will go lower in the short to mid-term. I definitely think they're going to be hitting around $115 per share. But the real question is, will they go below $100 per share, which I definitely think is possible for 2023. So that's my prediction for Apple, closer to $80 to $100 per share for 2023. Dollar cost averaging in the whole way down. And then before 2024, so we're still talking about 2023 here, I think that Apple can shoot back to around $150 per share. After that, let's do some predictions for Amazon for 2023, okay? Down 26% in the last 3 months. Amazon has taken a good spill here in the last year, down 50%. If we scroll down, we can see that it's still overvalued if you're looking at a PE ratio. They have a PE ratio of 77, by the way. So Amazon could fall a lot more further than Apple can. However, I don't think that Amazon is going to go to a 5-year low. We have a 5-year low of under $60 per share, closer to $55 per share. I definitely think it's possible, and I have price alerts set at $65 per share because I think that in 2023, Amazon will be going down to $65 per share. But on the same coin, towards the end of 2023, before 2024, I think it's possible to see Amazon above $100 per share again and closer to $125 per share. Now, we talked about Google and Tesla and Apple and Amazon in all the last videos. On this channel, we really like to talk about all those big tech stocks. So if you enjoy hearing and listening about big tech stocks, make sure you subscribe with post notifications on. But in one of the next videos coming up this week, we're going to talk about stocks under $10 per share. We're going to switch it up. I know you guys really enjoy when I talk about stocks that are under $10 per share. So make sure you slap a like on this video and comment below what stock under $10 per share you want to hear about. Okay, so we got some spicy ones, some juicy ones coming up. It's going to be a banger video, so make sure you don't miss out on that video coming out this week. Okay, now Google is the next stock we have to talk about. We've already talked about them on Instagram and YouTube. We made shorts and reels and full videos about Google at $88 per share, saying that the PE ratio is only 17, implying that it is one of the best deals in the stock market compared to the S&P 500. It's undervalued. It is a value stock right now. It's only down 40% in the past year, so there's still room for Google to continue to drop. Dollar cost averaging is going to be the best thing for Google personally, in my opinion. That's what I'm personally doing for long term. All these stocks I'm dollar cost averaging in, and I'm not going to touch them for 5 or 10 years. And it's going to be a beautiful, beautiful thing when I look at these stocks, Google stock, Apple stock, Tesla stock, 5 or 10 years from now, when I'm buying with a PE ratio of 17 and I'm buying Google under $100 per share. Now, let's make some predictions. So 2023, I have price alerts. I think that we'll see Google closer to $75 per share or even $72 per share. So I have price alerts. Here we have them at 86, but we're going to move them closer to $76 per share because that's my goal for 2023. Now, towards the end of 2023, I think we're going to see a bounce back in the second half of the year, therefore bringing Google stock closer to $125 per share, $120 per share once again. So around a 60-80% gain if we're able to get in at $75 per share. So buying low and buying a lot of your positions low as possible is really going to help you out in the long term if you are a long-term holder. But remember, it's impossible to time the market. Only very few traders are able to do it. So dollar cost averaging into these stocks for long term is going to be one of your best strategies. And the last stock that we'll be talking about is Meta Platforms at $120 per share. Earlier this year, we saw a very, very low price target on Meta Platforms at $88 per share. A lot of the other big tech stocks have already dipped down to their 52-week lows and their 3-month lows. Meta has not. So there's a good, strong possibility that we will see Meta Platforms under $100 per share in the next couple weeks, if not the next few months. Now, in the last month or so, we actually starting to see a positive upward trend. Okay, so that's an interesting thing to note, is that we are seeing a positive trend in the last month. However, in the last year and overall, there's a negative trend and bearish momentum going on. Okay, so as Meta Platforms continues to build up to 130, and if they go to $135 per share, I'm actually going to put a price target for 130 because that's where I'm going to start shorting Meta Platforms at. So if they go up to 130 per share, I think there's a good chance that they're going to go from 130 down to 120, down to 115, and even under $100 per share once again. So watch that for Meta Platforms. That's a short-term move. And in 2023, I think they're going to set a new 5-year low. So we will see them go below $90 per share, closer to that $80 per share range, which is where I like to buy most of my Meta Platforms at for long-term, by the way, in the $80. There's even a strong possibility we will see them below $75 per share in 2023, which is a good load zone. This is a great company with great fundamentals, by the way. They're a value stock. The PE ratio is 11. They have an excellent balance sheet. They have a really great balance sheet, by the way. They have an awesome revenue growth. They have really great net income as well. They're a profitable company. You can see that their EPS is closer to $2 per share. It was $4 per share at one point. So Meta Platforms is a company with huge growth potential. There's just a lot of risks going on, especially in the short term. So I want to see that closer to $75 per share before loading the boat. And I think that, we'll see Meta Platforms above 150, closer to $200 per share again towards the end of 2023 and before 2024. So I hope you guys really appreciate that video, taking time out on my New Year's to make a video for you guys, my thoughts on some of the most popular stocks in the stock market and where I think they're going to be in the next 12 months. Happy New Year. Thank you guys for all the love and support. Let's make 2023 an awesome year. Let's set some goals. In the close friends list, I'm going to be talking about goal setting all month long. So if you want to join that close friends list and get my premium content, message me here at the Daily Stock Market. Now 188,000 followers and over 648 posts on Instagram and even more on YouTube, where all the full length videos are on YouTube. Thank you guys for all the love and support. Share this video with a friend. Click on success number 7, success number 6 if you want to see all the positive testimonials. We now have over 700 positive testimonials and over 2,000 students a part of the program. So if you want to be the next success story, just message me here on Instagram to join, and I'll shoot you over all the information that is required. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.